So very quickly, dividend investing. I'm gonna make a whole separate video on this because it's a bigger topic. But if you look at this number, 6.83 dividend yield percentage, some companies will pay you just for holding their shares. So if you buy, let's say, one share of AT&T, they will pay you every quarter a dividend. You get some income. Okay, so this is my dividend history on my Robinhood account. As you can see, I made $4.68 on March 5th. Last month, I got paid $17.23 from Energy Transfer, from Apple, $9.64, $3.44, right? These are small amounts, but they add up, right? So it's very tiny amounts based on what you're holding, what shares you're holding, but these companies, they will pay you every quarter. And if you take that money and then reinvest it into that company, now you have more shares of that company and you get paid more dividend income. So this is a safe way to grow your account and to, build wealth. However, you need a lot of money in order to see something significant. Like, $100,000 invested in a company will probably get you something more substantial. Some people are investing 1.5 million into dividend stocks and then retiring and just living off of that income. So it's very safe, but the downside is you need a lot of capital. So let's talk about how to calculate dividend payout, right? There's going to be a couple of things we have to do, but this is very, very simple. So the first step is we have to figure out what their dividend payout is. How many cents do they pay per share? So what we're going to have to do is go to Google. So we're going to just type into Google whatever ticker symbol you want. AAPL is Apple, dividend payout. And what we see here is we can see that they pay 0.77 cents per share, right? So this tells us that for every share you have, they're going to pay you 77 cents just for holding that share. So over here, we're going to write 0.77. That is our dividend payout. Next, we want to figure out the time frame. Do they pay every month? Do they pay every quarter? Or do they pay only once a year? So again, we're going to go back to Google. And what you're going to do is you're going to click view more rows, or you can go to the NASDAQ website and look up the dividend history. And right, so here we can see that we can see their dividend history, right? And what we're noticing is in 2020, they paid dividends 4 times, right? Those 4 in 2020. In 2019, they paid dividends 4 times. I'm going to scroll down. 2018, they paid 4 times. So that's quarterly, right? They pay 4 times a year, quarterly. 12 times a year would be monthly, and only once a year would be yearly. So you just look at the dates and you can figure out what the time frame is, and this factors into our calculation. So we know that they pay 77 cents per share and they pay it out quarterly. So now it's just a matter of adding your own, how many shares that you're holding. So if you have 10 shares of Apple, if you have 100 shares of Apple, we can do the calculation here. So I'm just going to pretend that I have 100 shares, right? And we're going to multiply this by 0.77. And that equals $77, right? $77. But this is not how much you're going to be seeing. This is for the whole year. Since we know that they pay this quarterly, we're going to divide $77 by 4 because it's quarterly. So 77 divided by 4, $19.25. Right, so you're going to get $19.25 every 3 months. So every 3 months, just for simply holding the share, you're going to get close to $20 every 3 months. So it's passive income that's coming in that you don't have to do anything extra for, and it just goes into your brokerage account. Now you can reinvest this money. You can set, on most of your brokers, you can set it to DRIP, which is dividend reinvesting, and any amount that you make will automatically be put back into the share into the company that you are investing in. If you don't want drip and you just want to secure that profit for yourself, you can do that as well. It really just depends on your goals and what you're using dividend investing for. But generally, the more shares you have, the more money you're going to get from the company. So, and different companies have different dividend yields. Some companies pay more cents per share and some pay less cents per share. Now, it also depends on how expensive the stock is, because if you're getting dividends on a stock that costs 10 cents and you're spending $100, you can buy 1,000 shares with that $100. But if Apple costs 100, if the share price is 100 and you have 100, then you're only going to get one share of Apple, right? So you have to factor in how many shares you can purchase, as well as the dividend yield or the dividend payout for the company, and if there's dividend growth, which we're going to talk about more in another video. But I just wanted to show you guys that you can make passive income simply from holding certain stocks over time and just let that money come in, and you can either reinvest it or go ahead and spend it. But do remember that you have to pay taxes on that money that comes in from dividends. If you found this video helpful, please give it a thumbs up. I'd greatly appreciate that, and consider subscribing to the channel for more content like this. Also, we have a Discord group that we can answer all of your questions about the stock market or investing, and sometimes I signal my plays on different trades I'm making and option signals as well. So definitely consider joining there. Link is in the description. Let me know in the comments what you would like for me to cover next, or what sorts of topics regarding investing you would like for me to cover next, and I'd be happy to make a video on it. Thank you guys so much for watching, and I will see you all next time.